Today, we will be learning about the introduction to accounting principles. So let's get started with the aims of a business. So obviously, as you may know, the aim of any business is to be successful. In order to be successful, business owners must have skilled staff. Skilled meaning that staff has the right qualifications as well as experience in order to do the job. Please note that skilled staff can take your business forward. Secondly, businesses must ensure that they purchase goods and services competitively. That is, businesses must be able to source quality goods and services at a great price. Once they are able to do so, they can then achieve number three, which is to sell goods and services competitively. Once you purchase good quality at a good price, then you can sell at a good price. In that way, you can sell lower than your competitors and attract more customers. Fourthly, manage your finances properly. Every business must be able to manage their finances. If not, the business can seriously take a wrong turn. Fifth, makes a profit. Every business wants to make a profit. If you are able to achieve number four, which is managing the finances properly, then there is a good chance that the business can successfully make a profit. So let's talk about the concept of financial control. Why is it important to have good financial control? Basically, it enables you to plan and budget. Once you plan and budget, you can foresee what happens into the future. You can tell if the business is going to run into problems. Once you're able to do so, then management can make decisions now to prevent what may happen in the future. This is why it is important to have good financial control. In order to have good financial control, we must have good money management. This means having a constant cash flow, that is, the cash that is available to a business on a day-to-day basis. A business must have cash in hand to pay its employees, to pay its suppliers, etc. Also, it means having constant profits and remaining in business. Those are pretty self-explanatory. Bookkeeping. Bookkeeping is the first stage in the accounting process. This is a stage where you enter all business transactions in the book of accounts. Business transactions can be sales, purchases, bad debts, receivables, purchase of capital, etc. All business transactions must be entered in the book of accounts. You can have physical books of accounts or you can use computerized accounting software to record your business information. Most large businesses, almost all large businesses, use computerized accounting software because it might be near impossible to use physical books of accounts. You must note at this stage, accuracy is very, very important because if you are unable to detect errors now, the next stage, which is the accounting process, it may be even more difficult to identify any errors that would have taken place during bookkeeping. This can have a significant effect on the financial statements, meaning that some items may be reported incorrectly. Accounting. After the bookkeeping process, we then have accounting. So basically, once the bookkeeper enters all business transactions, the accountant will then use this information to prepare the financial statements. What are financial statements? We'll talk about the two most important financial statements at this stage. These are the income statement and the balance sheet. The income statement, also called the trading and profit and loss account, basically shows your net income or your net loss at the end of the reporting period. Your balance sheet, also called the statement of financial position, basically shows the financial position of a company as at the reporting period. It is important to note that financial statements must be audited. All businesses must have audited financial statements by independent auditors to show that these statements are in fact true and fair and is representing what is reported. These statements can then be used in the financial control in order to forecast and budget for future income or expenses. Users of financial statements. The users are not just limited to the owners and managers of a business. They use the financial statements to make financial decisions, to make management decisions, etc. There are other users, for example, Inland Revenue. Inland Revenue collects taxes for employees and the business. Having the financial statements ensures that the correct amount of taxes are being paid. Investors also use financial statements. Potential investors and current investors will want to ensure that the business is doing well in order to know when to withdraw their investment or if it's a good time to start investing. It also shows the stability of the company. Suppliers also use financial statements in determining whether or not to give a business credits. Customers are users of financial statements in the same aspect of that of investors. Employees also use financial statements to look at the future of their job security. Now we will talk about types of business organizations. Different business organizations require different financial reporting. Firstly, we have the sole trader, where there is one owner who takes all profits and is liable for all losses. Secondly, we have the partnership, where there must be from 2 to 20 owners, 20 being maximum. Profits and losses are shared on the basis of the amount of capital that is invested into the business. Thirdly, we have the private limited company, where they must have at least one shareholder and one director. This will be discussed further in other sessions. Fourthly, we have the public limited company. It is very similar to private limited company. The difference is that the public can subscribe for shares. Fifth, we have non-trading organizations, which is a non-profit making organization. And finally, we have the cooperative society, where they enhance the economic welfare of members and the society by providing goods and services. Somewhat of a charity, but not exactly a charity. And finally, we'll look at the careers in accounting. Please note that careers are not just limited to this list. There are a number of career paths that you can take when it comes to accounting. Also bear in mind, when you now start training, you won't get positions such as auditor or accountant. You will have to start at the bottom, which would be some clerical positions, some data entry positions, which is directly related to bookkeeping. So don't give up, work hard, train hard, and focus in the direction that you want to be in for the future. So thank you guys so much for looking at my video. I do hope you'll subscribe. Thank you.